Hey guys, spot to trade next week. In this video, we'll analyze dollar index. I will share with you a very rare candlestick pattern on gold. We'll discuss euro dollar, and I will share with you my trading plan for dollar CAD pair. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. I want to start our analysis with dollar index. We are in a daily time frame, and in order to get what is happening with the index, I suggest execute the price action analysis, because I want you to realize that since May, the market was very bullish. We formed a strong bullish impulse, and then once that high was reached, the market started a correctional movement. The market started to fall steadily, and then once that support over here was reached, the market started to consolidate, we bounced, we retraced, and then we got again a very strong bullish movement. So that price action is very bullish. And here, if we pay close attention to the level highs and the level lows, we can spot a very bullish pattern. First, we can spot this falling trend line right here. That was a very strong resistance. And also we have a trend line right here. So it feels like here in dollar index, we have a classic example of the bullish flag pattern. Here is the flagpole, and here is the flag itself. And you can see that after the local consolidation within the flag, last week the resistance of the flag was broken. And as we know, it is a very important bullish signal, and it will most likely lead to a further bullish continuation on dollar index. So far, I would expect a bullish continuation to that resistance. So far, it is the closest structure, and I believe that the market will manage to reach that structure quite soon. For entries, you should definitely consider the retest of a broken resistance of the flag. That will be the safest point for you to buy from. Traders learn candlestick patterns, price action patterns, structure analysis, multiple time frame analysis, risk management, and trade management with my course. Inside you will get the ebook with my trading strategy. Inside you will get the detailed video course. For more info, check the link in the description below or text me in one of the social networks. I will give you more details. Next one is dollar CAD. We are in a daily time frame, and first I want you to realize that dollar CAD is trading in a bearish trend. And recently we got a very important structure breakout. You can see that here we got a very important zone of demand. Wide one, strong one, the one that was respected so many times in a row. That structure right here was broken. The market successfully violated that structure, retested that, and dropped lower. And you can see that this week the price retested that structure one more time. We tested that, and on that structure we formed doji candle. So to me it feels like from that broken support, that is the resistance now, we can look for shorting. From that we can look for the trend following trade. In order to short the market, however, we need to execute the multiple time frame analysis. We need to analyze the lower time frames and look for the confirmation there. So let's open a 4-hour time frame and let's check how the price was reacting to the structure that we spotted on a daily. You can see that testing that structure, the price formed a very cute head and shoulders pattern. Here it goes, traders. Do you see that pattern? It is the classic reversal pattern that was formed when the market was testing that resistance. And here is the neckline. And the neckline here was broken to the downside as well. However, traders, here is a very important rule for you to follow when you trade the price action patterns. When you draw the neckline of the pattern, you should also look left at structure and check if there is some important structure on the left. If we look left, we can spot that over here, traders, we have a very strong structure that also should be taken into consideration. So our neckline here on dollar CAD will be based not only on that price action, but also on that price action as well. And what we will need to confirm the initiation of a bearish movement on dollar CAD, we will need a bearish breakout of that entire area to the downside. We will need the 4-hour candle close below that area, and only then we can start shorting. We can short the market aggressively or on a retest then. And shorting on a retest, your entry will be over here, stop loss will lie above the head, and your take profit will be the current low. So that will be the trade for you. Remember, first, the neckline should be broken, 4-hour candle should close below that, then you set your sell limit order, here will be your stop loss, here will be the target. Also, if the price keeps growing and violates the head level to the upside, that pattern will become invalid and we won't trade it. Euro dollar pair, daily time frame, and I guess you saw that on Friday the market was very bullish. And the main reason why the price bounced on Friday was the fact that the market reached a very important horizontal zone of demand, the zone from where we saw a very strong bullish reaction. Now if we open a 4-hour time frame, here in the 4-hour time frame we can spot that the price formed a high momentum bullish candle and then growth continued. However, if we analyze the level highs, we can spot right here a very peculiar falling trend line. And even though the market was very bullish, you can see that the market closed perfectly respecting that falling trend line. So next week, everything will depend on the reaction of the price to that trend line. And here I see two potential scenarios. First, if the price breaks and closes above that trend line, if we see the 4-hour candle close above that trend line, it will be a very important bullish signal. And then we will expect a bullish continuation to the next strong resistance. Our next strong resistance will be over here. So that is the scenario for those who want to buy euro dollar. If you want to short, you should pay close attention to hourly time frame, because on an hourly time frame we can spot that testing that trend line on an hourly time frame we have formed the descending triangle. You can see that here is our perfect descending triangle. And what we know about that pattern is that it is a very bearish pattern. And in order to short euro dollar pair next week, you should look for a bearish breakout of the neckline of the pattern to the downside. If the hourly candle closes below the neckline, we will expect a bearish continuation. So your plan to short will be to wait for breakout, hourly candle close below, set your sell limit order on a retest, stop loss above the highs of the pattern. Your first target will be that support cluster right here, and your second target will be our daily support. So, two scenarios, traders. Either you wait for a bullish breakout of the trend line on the 4-hour, it will be a very bullish trigger, or you monitor the descending triangle on an hourly time frame and you wait for a neckline breakout to short. Now let's discuss gold. And I guess you saw that even though the beginning of the week was bearish for gold, on Friday the market started to recover. And it feels like the main reason why the recovery started was the fact that the price reached this important demand cluster, this wide strong zone of demand that the price perfectly respected. And if we analyze the candlesticks, if we analyze the last 3 candles, here we can spot a very rare pattern. You can see that first we formed a bearish candle, and then we formed a doji candle with a very long wick, and then we formed a strong bullish candle that engulfed that doji and that bearish candle. That is the classic example of the morning star pattern, very bullish pattern. It feels like the market will most likely keep growing next week. As the extra confirmation, I also spotted the inverted head and shoulders pattern on a 4-hour time frame. You can see that here in a 4-hour we formed the inverted head and shoulders pattern, and before the market closed, the market successfully violated the neckline of the pattern to the upside. We closed above that, and it makes me think that gold will most likely keep growing, traders. And so far, our closest resistance will be that resistance cluster. Yes, we have a very strong zone of supply right here and I believe that resistance will be reached. So bias is very bullish. Remember that the market may retrace before it starts growing, so look for buying around the broken neckline, and here is your plan. Traders, remember that the 7th of July we're expecting the non-farm payrolls report. So pay close attention to dollar-related instruments on Friday. The volatility can be high. Traders, if you have any questions, if you want me to analyze something else for you, please ask in the comment section. I always reply. Also, if you want to learn how to trade, don't forget to check my ebook, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you soon. Thank you so much for watching.